Okay. Thank you everyone for coming. We're all very excited to be able to really talk, almost 5 to 6 hours on really the PayFi subject. And when we created this whole conference and mini stage, we really wanted to cover everything from macro to regulation, to all the different stablecoin perspectives in terms of how this all fits into the greater scheme of blockchain technology and PayFi. And now, most importantly, is how people are really using this space, right? What are their applications? And we're so excited to really have the best builders right now in the space today, right? So we have Red Dot Pay, we have Clickle, we have Kalisa, and ourselves, RD Technologies. And what we really wanted to set up as well was a global perspective. So today we really wanted to understand how each one of our partners as well as our friends are building in this space and what it pertains towards what PayFi really means in the future. So very excited to start today. Maybe we can kick off with Michael and then Rita and the rest and go down the line to just briefly go through who you are and also what your business does.
Okay, I'm Michael, the founder and the CEO of Red Dot Pay. The company is doing the crypto payment. What we want to achieve is to make a crypto usable like a fiat currency. Yeah.
Hi everyone. This is the third panel I'm on this afternoon, so hopefully, Justin, please keep it interesting. So I can stay awake. So I'm CEO of RD Technologies. We're a B2B stablecoin payment platform in Hong Kong. Here in Hong Kong, we're rooted in Hong Kong, but servicing global businesses who need stablecoin for cross-border payment, fiat accounts, and fiat rails. So very happy to be here.
Good afternoon, everyone. My name is Michael. I'm the CEO and founder of Clickle. We're a Abu Dhabi-based Web3 platform. And the Web3 narrative for us to be the Ripple killer. Well, I don't see a lot of smiling faces today because I know probably the market reaction last night, right? But hopefully during the discussion, we're going to share some light and some market making opportunity. Thank you.
Hey everyone, I'm Ezra Cabral, CEO and founder of Kalisa. We help businesses with particularly cross-border payments in a regulated and compliant fashion, instant payments for paying suppliers, treasury operations, and offering dollar accounts based out of the US.
We might need that, dollar account.
Awesome. Thanks so much for the introduction. Maybe we can start from Michael from Clickle, because I think everyone sort of heard Ripple killer. So maybe you can share a little bit more about what you mean by that.
Thank you. It's very funny. Last time we actually shoot it out there, right? We said we're a Ripple killer. And there was one guy put their hands up. I'm a Ripple investor. I said, okay, my friend, you can invest us too. Well, to say we are the Ripple killer doesn't mean we're actually going to kill Ripple, right? So for all you Ripple teams, right, you guys are safe. What we're trying to do is actually try to bring in a new business model, right? See, the Ripple is actually have been doing a very, very good job, right, for the past 10 years, building an alternative payment infrastructure, but it's actually really focused for business. Well, we think the mass adoption really comes in for everyone like you guys, or the people on the street actually start to have access to crypto and use that as a payment, right? This is why we're trying to be that retail accessible, DeFi native, as well as community-driven approach to complement projects like Ripple, and together with all the other payment infrastructure partners globally to really deliver a real use case to you guys. So this is why what I mean by Ripple killer.
Yeah, I think just to add on top of that, I think because all of the panelists are very happily RD's partners, and I think we all share the vision, right? Which is what I said in my keynote, which is payment 3.0 will definitely happen, right? Will definitely happen. It's just a matter of time, which is a global cross-border payment system that's built on stablecoins and various stablecoins, not just one company's stablecoin, and also maybe also built on various companies' distribution channels, right? and for different use cases, like Red pays on the retail, more on the retail side. So I think it's just like we share the same vision, which is a new cross-border payment system that's built on tokenized money.
Thank you, Risa. I think our panelists are very good with tidbits. So what exactly is Payment 3.0?
Okay, so I always use this sort of evolution of a payment landscape, like we came up with, which is, so the evolution is Payment 1.0 for cross-border payment was purely based on SWIFT and correspondence banking, right? And SWIFT is the messaging system. Correspondence banking is basically banks sharing private ledger, right? So you have Nostro, Vostro account, and so they settle based on private ledger. And that's why it's slow and opaque and expensive and not efficient, right? So Payment 2.0 is our fintech companies, right? The second generation fintech companies, I'll not name the names, but there are a lot, who use their own liquidity pools everywhere. They probably have licenses around the world, and they achieve faster and cheaper settlement using their own liquidity pools, right? But the problem with that is it's capital intensive, right? Not so many companies can pull this off because it's a walled garden, right? Each company has their own gardens, and they don't share liquidity with other players, right? Because it's their own walled garden. So Payment 3.0 is based on stablecoin or tokenized money, which is 24/7, instant settlement, messaging and fund flow comes together and takes a few seconds, and the cost can be near zero, right, to settle funds from any corner of the world to another corner of the world, and the messaging and fund flow comes together. So that's Payment 3.0, what we sort of call Payment 3.0. 3.0 based on tokenized money. But the main point here is actually the democratization of liquidity, right? So it's not walled garden anymore. You have various ways, DeFi, CeFi, DEX, SEX, to offer liquidity for currency conversion and settlement. So that's why it's more superior than traditional rails.
Yeah, thanks for that. And I think one of the main terms there is really global liquidity, right? And I think today what we wanted to talk about was how global liquidity really affects each one of your markets. Just to share a little bit, Ezra, you're building within LATAM, Michael within Middle East and Africa, as well as Michael here in emerging markets. I'd love to hear your views in terms of how macro dollar liquidity and how the overall landscape has really pushed your businesses to be able to solve pain points that you guys are seeing within the market today. Dave, we're going to start with Michael.
Okay. For us, actually, it's a crypto payment company. Right now, liquidity is not a big issue for us. As Rita just mentioned, for payment 3.0, right? Using stablecoin, actually, there's no liquidity issue between us and between the PSP. I think right now the challenge right now is this payment 3.0 just starts, and how to make each corridor working is really challenging. So different country has a different RFI requirements. So to align the sending information to the receiving party is very important. So each country has a different API need to adjust that. I think that's the challenge I'm seeing right now. Liquidity is not a big issue. We are not a challenger for Circle or Ripple. Actually, we are partner for them. Okay.
Thank you.
For them is that actually this payment 3.0 just is at a very early stage. We need to work together to make this happen. This technology-wise is not a big challenge. It's very simple. I think the problem is the mass adoption. We need to get people using these stablecoin rails to get the transaction flow, right? That's the thing we are working on. Yeah, I think probably within 1 or 2 months we can get this cross-border remittance live, so people can really enjoy the benefits of blockchain and crypto. Yeah.
Yeah, to chime in, I don't know if I have a catch line as catchy as Ripple Killer. I like that. We're going to have to noodle on that one a little bit more ourselves at Kaliza. But I think Rita touched on an interesting point about the involvement of like the Pay3 landscape. or Pay 3.0, sorry. It's interesting because before stablecoins, there hasn't really been much innovation in terms of how money moves cross borders. When you think about it, Western Union is one of the oldest institutions, since the 1800s that essentially went about setting out bank accounts all over the world. And the whole thought process behind Western Union was, how do we make it as easy as possible for folks to send money cross-border instantly? And I say instantly with the quotation marks because at the end of the day, what they were doing was fronting the liquidity and essentially charging for that. And many other institutions have since replicated this model, whether it's banks, other remittance platforms, or even commercial cross-border payment platforms. And so since then, I look at my colleague in the crowd, many other startups, to be more competitive and offer instant payments, have even gone out and said, we'll go out and raise some credit and use this credit to effectively facilitate a deposit in another market where we know we're going to be sending funds. And then I think the next leap was Wise, which essentially realized that, all right, we can actually net flows in and out of a market, but there still hasn't been anything until stablecoins that said, actually, we can move money in real time into other corridors without having to be constrained to effectively local bank account deposits. And so, similar to what Michael Gao was saying, we don't necessarily face like liquidity constraints. That we always work with bank partners in our core markets of Brazil, Mexico, U.S. to whether it's the FX, the PIX and SPAY payments, local bank transfers, before we on-ramp, and so or off-ramp into stablecoin. And I think that's been kind of the core part of our thesis. And how do we make sure that we're not only offering like compliant payments for our users, which are businesses, so they don't have tax and regulatory repercussions, but at the same time ensuring that there are no liquidity constraints, right, in using stablecoins in the Kaliza stack.
Just want to echo our fellow panelists, right? I think when it comes to PayFi, right? PayFi is a concept that's getting popular for the past 12 months, right? But actually, when it comes to payment, it's been around for as long as we can remember, centuries, right? Normally payment in the legacy banking falls under transactional banking, and it's extremely difficult, manual processed business, right? So it's not really, as close to everyone, right? And then at the end of the day, you think about a global total M2, that's 8 trillion, right? So there's a lot of money, right? There's a lot of zeros there, right? That's the total supply of money in the world, right? And then the largest company that doing payment take up how much of the market shares? Less than 1%. What does that mean, right? That means actually the direction is very clear. And then the size of the market deserves not only one winner, like Ripple or many other people, right? Multiple different winners, right? And we were talking about the Web3 approach. But actually, there's our counterparties in the traditional banks, in the traditional fintech company. So I think this is really not just to say, it's like, I use the synergy, right? In Hong Kong, there's a lot of cha chan ting, right? Local restaurant. At the end of the day, everyone's gonna sell this bolo bao, right? The pineapple bread, right? He has his own pineapple bread. We all have our own pineapple bread. But it really comes down to how can you build a narrative so your end user will come into your house to eat your pineapple bread, right? So this is a very easy synergy. But sometimes maybe I don't have a bolo bao. I have a curry puff, right? But when guys come over here to say, hey, I want an pineapple bread, I will say, hey, our partners, right, on this panel. So it's really a collective approach to resolve a long-term problems. At the end of the day, right, either Calico, RadoPay, RD, Kaliza, right? Thank you for the name mentioning, right? We all want to come up an alternative solution that actually make commercial sense for end users. That's what I think, what it matters.
Yeah, I think, I guess just to echo everyone, I think, what everyone is saying is it's still early. We're very, very early. And, it's a winding road towards the future. But, as we speak, right, like I always quote this number, Hong Kong's B2B payment flow last year was more than $1.2 trillion US. That's flow, right? And that flow is actively moving into stablecoin, whether you want it or not, because of many reasons driving it behind, right? Like emerging markets adoption of stablecoin, because of their needs to access dollar, right? And they need it for cross-border settlement, for global trade. Many reasons, right? Regulatory clarity around the world. So to echo Michael's point of view, which is, like there are various use cases that's driving adoption of stablecoin in various places. Like I also, like each use case has its own set of customers, right? And I always say in Hong Kong, for example, in Asia, I don't think there is a very strong, as of now, there's a very strong use case for retail adoption for stablecoin, like in a day-to-day sort of purchase of coffee, that kind of use case. Why? Because fintech, where the payment 2.0 has already been so successful and so convenient, right? Like I have so many ways to pay for my coffee in Hong Kong. I don't need a stablecoin. What problem does this solve for me, right? So I think in my previous panel, I also talked about this. The pain points you solve the most for your customers will be the first use case to be adopted, right? So why today stablecoins are most used for cross-border payment towards on certain corridors, because it solves really very strong pain points, right? For consumers or businesses in those regions. So I think, just going to the pineapple bread example, right? Like each use case has its own set of customers, and all of them are driving adoption of stablecoin, and we're early, and like all of this is contributing to the growth.
Yeah, so that segues very well into the next question, which is really use cases, right? I think everyone at this point, we've talked a lot about how with blockchain we can move money faster, we can move money cheaper. For the benefit of the crowd, I think what would be nice would be to understand what use cases you guys see on the ground, or maybe help everyone internalize with a story in terms of where you guys are operating and what's the most exciting thing that you guys see where a user or a client has come to you directly because of your product that's solving something that they have problems with. I mean, maybe we can start with Michael, especially because I think it's interesting for your side because you're one of the strongest components here, which is in the B2C space, right, in the retail space. And I think that's something that's been extremely hard to do. So congratulations on the growth, and we'd love to hear why your payment platform has grown so quickly in the retail space, and maybe the stories that you see on the ground as well.
Okay, thanks for that. Yes, we are only dealing with the retail users. So fortunately, we got a user traction globally, especially in those undeveloped countries in Africa, Middle East, South Asia, and Latin. So the product we launched to the end user is a crypto credit card. So it's the same as a traditional credit card, but the user can use a crypto instead of fiat currency. So that's what I mentioned at the beginning, is that we want to make a crypto usable like a fiat currency. And right now, this is the product is well received in those undeveloped countries. So it's mainly for them to have US dollar payment instrument to do the online payment and the offline payment. And another use case is for them to preserve the value, especially when its local currency has a huge inflation. Okay, that's probably the two reasons why this product was so popular in those countries. And we are going to continue to roll out to other countries. Right now, we issued a card from Hong Kong. We also issued a card from Singapore. And other than the card itself, then we want to move on to do the remittance, the cross-border remittance. So that's going to be live within this month or next month. So that's another use case. That means how to use the crypto for remittance. So for us, it's mainly looking at what the end users want. But for the second one, I think that's solve the real problem of payment 2.0. When you do the cross-border repayment, then you need to build liquidity in different countries, and it's very costly, right? And by doing payment 3.0, then we are able to lower the transaction fee and make it faster. That's what we want to achieve, to bring the value to the end users. Yeah. But to do that, we need to work with different partners like RD, like other PSP, also called repo. Yeah.
Great. And I see, Ezra, you're nodding a lot. So I assume you're seeing that kind of theme in LATAM as well.
A similar theme, but also I think it's a pretty salient point. You were talking about Michael. I think so I live in Sao Paulo, even though I was born and raised in the U.S. and in Washington, D.C. And the price I pay on a monthly basis, like relative to the dollar, has fluctuated about like 25% in the last like 4 months in Sao Paulo for like my monthly rent. And I just found it fascinating that I'm constantly looking at the exchange rate, which has been volatile to say the least. And this is, I think as the previous panel was referencing, we're in interesting times, whether it's discussion of tariffs or whatever it might be. There's rippling effects across the ecosystem, particularly across LATAM. You'll see that in a lot of the exchange rates. In our markets like Mexican pesos, Brazilian real. And it's to the extent that, even though we're business focused, I would say that this is a very real problem that many businesses face, where their treasuries might be traditionally held in pesos or real, and they may actually end up having to hedge against that, right, and custody or keep it in dollars. And, I'll point to actually a very real problem we ran into before we started our business. The first time we capitalized our Brazilian entity from the U.S., it took 3 weeks and $2,000 in legal fees to make that happen. It was very eye-opening for me, and like how costly it was and how much time it took. Every market's very different. In Brazil, for example, every type of payment in and out of the market needs to be registered with the central bank. Everyone has a different central bank categorization. And it was a good learning curve, right? And so for us to systemize that for other businesses, they're doing the same, whether it's helping influencers that might be taking payments, right, from the U.S. or sending payments out to Asia for suppliers. A motorcycle, actually, very real example is a motorcycle manufacturer in Mexico, where they will be facing 4 days of delays to essentially receive the chassis in Jalisco before payments received by the supplier in Hong Kong. One issue they're running into is how do we help expedite our supply chain and make this process as fast as possible so that we're able to produce more motorcycles, beat their numbers of what might have been, I think it was 1 million last year, and helping their growth efforts. And a lot of that's tied to like settlement times and cross-border payments. So it's a mix of, I think stablecoins are really having their moment, to say the least. I feel like most of us were exposed to stablecoins because they offered a way to capture your earnings after like maybe some speculative trading, but now there's very real payment and really saving and treasury management use cases that I think is very exciting.
Maybe I can share another example where, for the past 5 years, I've been living in Dubai and Abu Dhabi, right? Move over there after COVID, right? Not by choice. Yeah, I was there for a fintech conference, and all of a sudden I feel like, wow, there's a lot of Habibis, and then it's not bad to build a real business there, right? But two of the learning pieces, right? One is the educational process, right? When it comes to a regulated business, right, where we are all operating regulated business in an efficient market like Singapore, Hong Kong, US, Europe, right, where the regulators, the understanding is there, right, and the market is there, it's very close. But areas like Middle East, Africa, is a very cash-rich society where they are terrified about AML, money laundering, right? Talking from a former regulator, I used to be a regulator, so I exactly understand how the regulator will react to financial innovation, right? So that's there's a very pronounced argument when it comes to that part, but it's also a real use case. For example, right, UAE, there's a lot of expat. And then I use an example, a largest indoor golf club, right, where they have 40 people as a team, but it came from 33 countries, right? There is a local South African golfer. Every month he got paid in dirham, and he has to send money back to South Africa, right? You know the South African onshore capital control, end-to-end cost is 8%, and you have to wait for multiple days. I still remember the day when I go into that place, I explain everyone what is crypto, what is stablecoin. No one understand. But I said, if you pay attention for the next 20 minutes, I'm gonna save 50% of your transaction cost. Everyone put their hands up. And I spent the entire afternoon helping them to download, centralize the wallet, tell them how to top up, how to make the first transfer, right? I'm not trying to be cheesy, but I can see they're literally crying when they transfer the stable coin, where instantly the people actually on the other part of the planet actually got it, right? This is where I think is actually a real use case. Another use
For
case.
me to, yeah, Hajj.
Yes. Another use case is there is a country, I don't know if you guys come across, it's called Ethiopia, right?
Yeah,
It's
my
one of the
family's from there.
Oh, yeah. 150 million population, right? There's a lot of our friends there, right? It's probably 20 times the population in Hong Kong, right? And there's the one region called Somalia region, right? Where all the Paris used to be. But now, right, they got smarter. Everyone became a money changer. But you know, you have to travel 45 minutes for you to find a real cash counter, right? So I think those are the right region to actually build disruptive technology and really apply to daily use. Yeah, just my 3 cents.
Wow, very, 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 very good examples, Michael. And I was going to talk about. I mean, like I mentioned that I know that in Middle East there's this Hajj, where the pilgrim from like Muslims around the world to Medina, right? And then they always have this problem, which is all these people from mostly emerging markets, when they go to Saudi for Hajj, it's just painful for them to pay there, right? So they have always been trying to come up. I know the government has always been trying to come up with a solution to make it easier for all these people from all over the world, all the Muslims come all over the world to pay easier when they come to Saudi, right? So I think that's just another example. And I think so when it comes to RD, the use case we are focused on is B2B cross-border payment, especially for related to global trade. Why? Because I think there are many reasons why we're already seeing lots of adoption of stablecoins from importers and suppliers in all these emerging markets to use stablecoin to settle. Because one is the biggest export center, right, which is China. More and more it's exporting to emerging markets, and the emerging markets, I guess we already have enough examples here. The emerging markets are left behind by traditional financial system, right? That's why the new things are adopted more in those countries, because they were left behind by the traditional rails, traditional systems. And Michael was talking about actually financial innovation, right? So actually in the past decades, we have seen lots of financial innovation for domestic market. Like for example, Asia, various countries and some European countries, there have been lots of financial innovation for domestic market, right? Like I said, we can pay very easily in Hong Kong. When I go to China, I can pay very easily using all kinds of tools to pay domestically. But cross-border, it has been just painful and not much progress for many, many years. Why? Because it's a heavy lifting. It's heavy lifting, all the global payment system, SWIFT, Visa, MasterCard, it has been around for decades, right? So Visa was has been around for I think almost a century. So to have those global consensus or network to settle using tokenized money is going to take some time. Again, going back to my point, it's early. But all of these use cases, especially in the emerging markets, which are left behind by traditional rails, will be the first ones to adopt it. So I think Hong Kong. Coming back to Hong Kong is very important for that, because Hong Kong connects this biggest export center with the rest of the world, right? And so with stablecoin innovation, Hong Kong will be becoming even more important, because this is where the stablecoin will land, and convert with fiat, right? So our focus would be like a B2B cross-border payment.
Just want to add on one thing, right? I guess I think many years ago, I actually asked a question for the former CEO of MasterCard. I said, my friend, who's your competitor? I was expecting him to say Visa, or, well, back then UnionPay is too small for them to give a shit, right? Should I say this? But to my surprise, they say no, right? In fact, the large banks, the card schemes, none of them are our competitor. Our real, genuine competitors is cash, right? So actually, it really put, me into perspective, right? You see, none of us are really competitors, right? They're building amazing card programs for real use case. They're focusing our regional lab team as a special region, right? We're working together with all of them to be the Ripple killer and work with Ripple together to fight cash, right? And then I was actually just came from Shanghai. And to my surprise, I think the real adoption is happening, right? Because I was walking on the street and see a beggar there, right? And then I don't have WeChat Pay, I don't have cash. The guy looked at me. It feels like I've got a Web3 vibe. He said, "I have a crypto wallet. If you want to." Yeah. So I think the retail adoption is slowly coming in, as long as we really have a aligned, collective, shared dream with the support. And actually, it is. I don't know how many of you guys are actually in crypto. Sorry, in payment, right? If you haven't got into crypto or payment, don't come in, because it's extremely difficult. And then, I start losing hairs when I go into the PayFi thing. But, but we've done the heavy listing so that you guys don't have to worry about that part.
Case in point. No, that being said, it's very interesting to hear about the advent of like cross-border payments and how difficult it is. I think many of us probably entered the space because it was born out of frustration with some sort of pain point that we experienced. Myself, my first paycheck in the U.S., I remember being lost in the mail, not being paid for 3 months when I was in college. I was in New York at Columbia University for engineering, and just remember trying to get by. And it's just a crazy concept that we were relegated to paper checks, have since evolved to direct deposits. But I think, Rita, you touched on a really good point that a lot of emerging markets have not had to go through this passage of, I think what I saw in the U.S. with like checks and whatnot, whether it's the jump to M-Pesa in Kenya or the jump to Alipay and WeChat, in this part of the world. And so to that end, there's still this gap of like and I think we're getting to this theme, every country is moving this direction, whether it's led by a central bank or a monetary authority, in adopting real-time payments domestically, and there's still nothing really to stitch that together apart from stablecoins, which I think brings us all together here.
Yeah, go ahead, Rick. Yeah, so I think those are great points, and I think something to highlight here on the panel is that most of you had built payment companies on background or worked with payment companies in the past. So we have someone from Alipay, we have Ezra from Visa. Michael here also worked directly with at DBS, if I remember correctly. I mean, I'd love to hear, Ezra, just now you mentioned it's right timing and the advent for stablecoins is coming out now. I'd love to hear more in terms of why you guys think that PayFi is happening today versus what it was 3 years ago, right? Because the technology has always been there. So I'd love to hear what you guys think are sort of the biggest catalysts going forwards.
Okay.
So I will admit that I'm a bit late to the crypto party. So I remember in 2013, I was working at a startup. Well, first job was me and 4 other folks. We built a peer-to-peer wallet in 2013. I did the whole quintessential Silicon Valley story, slept on the floor with a sleeping bag. We were very fortunate. Eventually, we sold it off to Square, and fast forward, went to the dark side, went to Visa, where Visa said the same thing as MasterCard, that their biggest competitor was cash. And my learning on my first week on the job, we were hosting 12 people coming to the office, and I remember my manager at the time was like, "Ezra, I'm going to give you the tall task of booking a conference room," which I laughed at. I was like, all right, sure. Lo and behold, it was for the Federal Reserve Bank of San Francisco, for MasterCard Send, our direct competitor when I was working at Visa Direct, and the Clearinghouse Network. And the Clearinghouse Network, for context, They're one of the 2 ACH operators in the U.S. They're also owned by banks like BNY Mellon, JP Morgan. And the crux of this meeting, this was 2017, and at that time, maybe a dozen countries had real-time payments. Today, there are over 80 countries that have real-time payments. And in my opinion, that's probably the boon or one of the single most important factors for why we're in this phase of why stablecoins are so important. Because I think stablecoins become increasingly more valuable when every country has the opportunity to say, we have a bank transfer system that is immediate and fast. That was not the case 10 years ago, 3 years ago, right? Or 3 years ago, maybe about half as many, about 50. And so I think that last mile is incredibly important, but at the same time, there's a lot more regulatory clarity, which is a significant factor, I'd say.
Yeah, I think, sorry to jump in. So I think it's the same for any technological revolution. It has always been that way. So it keeps brewing, there's lots of brewing until that Windows moment, iPhone moment, whatever moment, right? So I think has been lots of brewing in terms of customer awareness, the industry awareness, perception, regulatory clarity, and the maturing of the whole ecosystem. So I guess this year we always say this year 2025 is the inflection point of stablecoin mass adoption. Actually, maybe last year was already the inflection point because I think regulatory clarity is becoming really strong over the world. There are more than 25 countries with a stablecoin regulation framework or law just being in work as we speak, right? So I think there are various things that's been brewing, but it has always been like that for any technological revolution. So that's why it's now, right? But when it comes to incumbents, right? Because you mentioned we all were founded like payment companies before, some being very big. I think with any technological revolution, right? Or evolution, incumbents would be slow to adapt. Why? Because they have all this traditional business to care about, right? So that's why with any new evolution, the new entrants become the main driver, right? Because the incumbents have too many baggage to handle. So that's why I think but one definitely important factor is also the convergence of traditional players with the new players. That's also one factor that's driving all this adoption, which is they are coming together as well, right? We are at RD, we're seeing really traditional names coming into the space, both from payment space or FI space or merchant space, coming to the space to use a stablecoin for cross-border payments. So I think there's also convergence that's also driving the adoption.
If I might add in a little bit, right? I think the biggest difference 3 years ago versus now is actually the major macro change, right? 3 years ago, what was the guy's name for SEC?
Gary Gensler.
Yeah, Gary Gensler was still the chairman, right? And 6 months ago, right? Donald Trump was now president. Now, just think about, right? In short of less than 6 months, right? Well, they actually initiated try to make U.S. stronger again by leveraging the blockchain technology, right? They're not going to build a major crypto exchange for everyone just to pound, right? They're really strategically, from a state level, try to think about how they can protect their own interest, right? I mean, dollar is their interest, right? If people are moving to an alternative payment system, well, I want to make sure I get in there early, right? That's why they launched all those initiatives. And then starting from that, every single country, their decision makers, their policy makers are thinking about that, right? I don't know how many of you guys actually keep up with that, right? You see, I think yesterday PBOC announced that their M-Bridge initiatives right now is actually connect to all the ASEAN country and also Middle East country, right? Which potentially can settle in RMB, right? That's actually a major progress. I think 3 weeks ago, we were actually in Malaysia, right? We had an official meeting with the Prime Minister of Malaysia, where throughout the entire meeting, he was saying that, hey, you know what? We want to learn how other regions like Hong Kong, like Singapore, like UAE are your learning lessons, right? When it comes to leveraging this technology in payment, right? Because payment as a use case is not like fancy, but what it comes down to, what currency, what asset do you hold on to that to do your payment? So I think there's generally a structure change globally that might not really impact every one of us, right? But actually can allow a state to really jump up on the global ladder, right? Just because they actually push for that. I can see UAE has actually kind of leading the way for the past 3 to 4 years, where everyone and their dog are trying to go over there, set up something, right? And we're very happy to see the Hong Kong the energy is very strong. People are coming back. So I think those are the macro picture change that actually have a positive impact on the payment part.
Okay. Answer the question from Justin. What's the difference from now to 3 years ago? My view is that the PayFi is different from crypto exchange. Crypto exchange is they have many roles on their own, right? They are investment banks, they are broker dealer, they are the banks. PayFi actually, if you want your business scalable, you need to work with different partners. I think the challenge we right now is that how to run a business in a compliant way by your partners, because you cannot run a payment business alone. That's the major difference. So this technology has been there for more than 10 years, right? The crypto wallet has been there for many years, but the thing is that if you want to mass adoption, you cannot just play it within the crypto community. You need to bring value to the non-crypto people. So just I mentioned that the two benefits: one, preserve the value using stablecoin. Second benefit is that you have a US dollar payment instrument. So if you want to make your PayFi business successful, it's not to revolutionize the traditional payment business. It's actually how to run your payment business acceptable by the traditional payment business, so that you can be part of the payment ecosystem. That's very important, because this is unlike a crypto exchange. You just do it yourself. You really need to work with there's an ecosystem for this. So I think comparing to 3 years ago, I think more payment partners are acceptable to cryptos right now, and they have more understanding of the AML, like a KYT and a compliance related issue. So they are willing to try. I think that's a good thing, right? Yeah, that's what I see this. I think like the other panel, other people mentioned here, macro environment is different. People are more acceptive. They don't think this is a scam. And they realize that there's a value to use the crypto for payment. So that's what I see.
Yeah, I think just one thing Michael mentioned, that it's not just probably like one thing, right? Like everything needs to come together for this PayFi sort of ecosystem to work. Actually, we always talk about in the payment 3.0 ecosystem, there are 4 layers, right? So you have the settlement layer, which is the blockchain, right? And then you have the asset layer, which is different stablecoins or different tokens. And then you have on-off-ramp layer, which is changing or conversion between fiat and stablecoin and other crypto. And then you have the interface, customer interface layer, which is the wallet, the different types of wallet, how you interact with all these services, right? If you look at the 4 layers in the past few years, it has always been, all of them have been maturing, right? There are more and more effective and fast and cheaper blockchain as a settlement layer. And you have more and more assets, which is more and more stablecoins issued by compliant stablecoin issuers. And then you have more and more compliant on-off-ramp players. And then you have more and more wallets that are more customer friendly, right? So all of that layers need to come together for this mass adoption to happen. And so I think that, going back to my point, that it has been brewing for years, and now I think we're at that inflection point.
Yeah, and I think something highlighted here versus 3 years ago is I think this time around, it sounds like everyone's having quite a collaborative spirit, right? Whether everyone here is working with each other, whether, Ezra or Michael, you mentioned things with working with regulators. It seems like it's an open conversation and people want to move forward, whether because it's for local currency sovereignty or whether it's because the fact that it is touching things like M1 and M2, right? So I think this is very interesting versus what we see 3 years ago, which tends to be more like, how do we pump Bitcoin, right? How do we pump meme coin? So that's something very exciting. We only have a couple minutes left. Since we went back in time, maybe we can go forward in time. Just a quick round of predictions in terms of what you guys see in the PayFi space, maybe in the next, let's say, 10 years, starting with Michael.
Well, this is a very big topic. I think a few things I see. I think stablecoin will be more adopted in the undeveloped countries as a substitute of its local currency. So that's number one. Number two, I think for cross-border remittance, more and more people are going to use a stablecoin. I think probably 5 to 10 years later, we can see more people are doing the payment on chain instead of through SWIFT. That's what I see, yeah.
Yeah, so my prediction, I will always mention this one. So I think in 5 years' time, the stablecoin market cap will grow to $3 trillion US, and that's like also compared to the global M2, still small, right? So I think that's that. For global, used for different use cases. Now for Hong Kong, the 1.2 trillion B2B payment flow, I'm hoping in 3 to 5 years, half of that will be done by stablecoin. So I think that's definitely going to happen.
I think 10 years too long, right? Probably not even 3 years. Next convention, PayFi is not going to be a topic because PayFi is getting like a commodity, right? Next convention is going to be Standard Chartered Bank, JP Morgan sitting there talk about PayFi. We're on average 60 years old, right? So I think what is the biggest risk? The biggest risk is not to take risk, and we are taking the risk today. But this is not just normal risk, it's risk-adjusted risk, right? Compared to payment, right? It's definitely low risk, high return versus perpetual trading, right? This is what we're doing. So I think last but not least, just shout out to the Clico team over there at the corner, right? Without you guys, couldn't be sitting here, but this is only the start. At the end of the day, we are the Ripple killer, but we're not a payment company. I think a much bigger vision, just not to position ourselves, all of us as a payment company, right? We're actually building a unified financial platform that actually gives easy, effortless access to individual, corporate, and business. A destination agnostic approach, right? Where from there, we can power all your experience, either legacy banking or Web3. And that's the ultimate dream.
Last historical anecdote from me. I think part of the reason why we're talking about stablecoins and not SWIFT is because SWIFT came about in the 70s in Belgium out of a conference with a few European banks. Here, everyone's on stage talking about everything but Europe. We're talking about Asia, we're talking about LATAM, we're talking about Africa. I think when we talk about stablecoins today, we're talking about stablecoins that are backed by assets in the US or Singapore or various markets. I truly think the future stablecoin that we all will adopt and interact with is one where the assets are sitting across various banks internationally. It requires a little bit more effort and work, right, across these various banks, across different regulatory environments, but that's what truly allows frictionless commerce going forward. And so, like everyone else, just echoing that, I think this will be the predominant form of cross-border payments.
Very good.
Great. Thank you so much to our distinguished guests, and thank you everyone for listening. Let's give a round of applause for these guys.